looking at USDJPY, and then we'll be looking at key variables as regarding to how we would take the trade subsequently. Looking at future, how the price would react in the future. Okay, so basically, first thing we want to identify is the overall market trend or market direction. We can see that the USDJPY has been going bullish with time. Sorry, let me just. The USDJPY pair has been going bullish over time. Okay, creating a series of higher highs and higher lows. I think I made this in one of our previous videos. Okay, I think I made this one of our previous videos. Then this is equal high, so I won't mark this. I'll just extend this all the way here. Then capture this as a low, and then price going back to create a new high. Okay, hopefully we are expecting price to break through this last high that was printed. That's if the market has the push it needs, the bullish push, okay, to break through this particular high, this last high that we have over here. So that's what we're anticipating. That's what we want the market to do. We can break through this last high. Okay, so this is what we want the market to do. Okay, and if it cannot, if the price fails to break through this the previous high that was created, then we can start looking at probably sell opportunities or taking the trade all the way down. But for now, like I said, we identified the market is going an uptrend. So you want to basically be looking at buy opportunities. You can possibly counter trend if you want to, but I think ideally the best move or the best motion to make is to wait for a good buy setup. Alright, so since we've completed this now, the next thing we need to do is to identify our key zones. And what key zones are we looking at? We're looking at our demand. We're looking at our supply zones as well. Okay, so these are basically the major things. Then you can add up S and D to the list. Sorry, you can add up S and D, which is support and demand zones, to your list if you want to. Then I think for now these are just the basic zones we'll be looking at. Okay, so first things first, we will need to look at our demand and supply zone. Okay, now what is a demand or a supply zone? These are literally regions that price has mitigated upon severally, right, before making an impulsive move. So like for instance here, you could see that here was a demand zone or a demand level, whichever one you want to. I think zone is better. Here was a demand zone, and why was this a demand zone? You can see price came here, and then it used its wick. Mind you, these wicks on a lower time frame, you would see them appearing as full body, okay, full bodied candles. Although this is a higher time frame, this is a daily time frame. That's why they're looking like this. But by the time we move down to like let's say the 1 hour, I think you get to see a clearer picture of this is what we literally marked out from the daily time frame, and then the 1 hour is giving us a clearer picture. In that way, let's go back to the daily time frame. Okay, so that will finish from there. So we identify this as our demand level, and previously, if you notice, this was acting as a supply level to price, but then immediately price broke out of the supply. It came back and then turned this to be a demand zone. Now, why did this happen? This happened because of the interest between the buyers, all right, and then probable sellers. So up here we had sellers stepping into the market, pushing price down, and then buyers came up, pulled the price, right, pushed the price above this particular high right here, which ideally was not supposed to be broken, but then eventually it did get broken. Okay, so price came back down. There is now a key zone the market will tend to respect over time. If you notice, even before price pulled up from this particular region, there was a little mitigation here before price pulled up. It didn't pull up with just the wick, okay, which means that participants are literally interested in this particular point. Okay, so we have this as our demand. Let me just switch this. We have this as our demand. All right, so the next thing we need to do is to move down to our lower time frame and then spot what we can spot from it. Okay, still on this supply and demand. Okay, then up here, right, up here, this is the last high we have. This here becomes our supply. This is our supply. Okay, I labeled them these colors so that I would understand that, okay, if price comes to my demand, I need to buy, which is this green, and if price comes to my supply, I need to sell, which hence the red color. Okay, so the next thing we need to do is to go down to our 4 hours time frame. So let me just exit this. Let's go down to our 4 hour time frame, and then so now that we're in our 4 hour time frame, we literally would want to do the exact same thing we did on the daily time frame, only that we, in this scenario, would want to like narrow things down, okay, so that would have a better narrative of what we're looking at, or a better scope of what we're looking at from our charts. So First things first, we would equally want to mark out key demand and supply regions as well on our 4-hour time frame, or probably modify the existing ones we already had, which is like this one now that we had from the daily time frame or the daily perspective. Now you can see that we have another key demand structure here. This is another demand level here from the 4-hour time frame. So let me change the color. This is the demand from the 4-hour time frame. Okay, and if we extend this, I'm sure price literally respected this zone. Like there's lots of interest within this particular level or this particular zone. Okay, so this is actually a probable region for price to most likely react or retrace back to. Okay, and so therefore we would want to be interested in price getting down. So let me put this in. Okay, want to be interested in price getting down to this zone here, this 4-hour demand, and then we would want to look at the direction the price will take. If it's to keep buying, or if it's going to break down. If it's going to break out of this demand, then we'll be looking at targeting the next, which is this particular daily demand level. But for now, this is what our 4-hour is giving us. Okay, now if we want to even make things easier, we have another one here. We have another one. I'm very much interested in demand in supply regions turn demand and demand turn supply, because they would give us a stronger edge, a stronger avenue to anticipate a better entry points from the market. Okay, but why I won't exactly take this particular move here is because this particular level here, all right, let me just delete this, is because I already have inefficiency, my fair value gap here. Okay, and then I have another fair value gap as well here. So I have two fair value gaps, and I don't really think I would want to trade into the first one, since I have lots of I have some imbalance here all the way down here, so I would want to wait for price to probably get down to this point. This is giving me a cleaner entry region compared to this particular level here. Okay, but either ways, this is just what the 4 hours is telling us. So now what we can be looking at is, if we're looking for a short opportunity or a sell opportunity, we can look at taking the sell trade all the way down. Okay, can look at taking the sell trade all the way down. For trendline traders, you can have your trend line drawn. Okay, I think even from this zone you can have your trend line drawn. Sorry, have your trend line drawn from here, and then you can take it all the way. So you can see that we have our trend line looking like this now, and with the anticipation that price will obviously come back down and tap into this demand zone. Hopefully, if it marks at this the trend line we just drew, that's adding extra confidence to our particular trade. But for now, like I said, we only want to be interested in long opportunities. Okay, we've not seen any value change of character from the market to tell us that okay, the long or the buy opportunities ended, and so therefore we should be looking at sell or just short opportunities. The market has not given us any indication of such. So so now what we'll do is this. We'll go down to the 1 hour time frame. Okay, go down to the 1 hour time frame, and then look at what to do from this 1 hour time frame. Okay, so in the 1 hour time frame, we're looking at OBs, which is order blocks, and then still modifying our fair value gaps. Okay, so another block is a region or a point where a large market order has been executed within a very thin or short period of time. So how do you spot order blocks? You spot order blocks due to the presentation of large bodies, right? That's following a previously closed candle, like a short candle, right? And then you obviously have like a large candle, like something like this. Most likely, I love identifying my order blocks if they are 2 times or more the size of the previous candle that was printed. Okay, like this particular one here, I would consider this as an OB. Plus, I have my fair value gap here. Okay, so I just need to look for my valid inducement levels that I would use, and then take my trade at the OB here. So this is basically what we'll be looking at from the 1 hour time frame. Like I said, just looking at order blocks whatsoever. So like here for instance, you can see that we had an OB here that price respected. It's an OB, although price dipped down to clear to add the liquidity that is being cleared. Okay, so basically what you need to do is, since you have something like this and then you have like lots of mitigation around this particular region, let me just mark it out around this point here. Let me just take it to this point here. All right, you have like a little consolidation before price broke out of this zone. Hypothetically, the best thing to do is to set your stop loss just right below here. Okay, this is more or less serving as like your protected low all the way down here. This is serving like your protected low. So I feel like setting your SL here would be a much more preferable option as opposed to setting your stop loss just below your order block. Okay, let me label this. As opposed to setting your stop loss just below the order block, which is right here. So right here, sorry. So you could set it here, and then is that your protected low is already covering this particular trade here. Okay, so this is basically it, and then you take your trade all the way to the buy side, depending where you want to take your profits at. Okay, so this is basically how I'll trade. Now I don't want this video to be lengthy, so I will do another video, right? I'll tell you how I enter my 5 minutes and then my 15 minutes time frame as well, and then what I look for in my 1 minute time frame. So if you're interested in that,